we are covering the child tax credit and the additional child tax credit, focusing on changes for the 2025 tax year from the One Big Beautiful Bill. The exam will test your knowledge of the increased credit amount, which is now $2,200 per qualifying child, up from $2,000. To get the credit, you first must have a qualifying child. The exam loves to test this, so remember the mnemonic CARES. C is for close relationship, meaning the child must be your son, daughter, stepchild, foster child, sibling, or a descendant of any of them. A is for age. The child must be under age 17 at the end of the tax year. The exam will trick you with a child who turns 17 on December 31st. In that case, they do not qualify. R is for residency. The child must live with you for more than half the year. E is for eliminate self-support. The child cannot have provided more than half of their own support for the year. And S is for support, which ties back to the previous point and confirms the taxpayer provides the majority of support. Now let's talk about the income limitations, a favorite exam topic. The credit phases out for high-income taxpayers. The thresholds are $200,000 for single filers and $400,000 for married couples filing jointly. The credit is reduced by $50 for each $1,000 of income or fraction thereof above these thresholds. For example, if a single taxpayer with one qualifying child has an AGI of $210,500, their income exceeds the threshold by $10,500. We count this as 11 increments of $1,000, so the reduction is 11 times 50, which is $550. Their credit would be $2,200 minus $550, resulting in $1,650. The exam will absolutely give you numbers that are not round to test if you know the fraction thereof rule. Next is the refundable portion, known as the Additional Child Tax Credit or ACTC. This is the amount you can get back even if you owe no tax. For 2025, the refundable portion is capped at $1,700 per child. To qualify for the ACTC, the taxpayer must have earned income of at least $2,500. The exam will test the calculation. The refundable credit is calculated as 15% of the taxpayer's earned income exceeding $2,500. For instance, a taxpayer with $10,000 of earned income would calculate 15% of $7,500, which is $1,125. Since this amount is less than the $1,700 cap per child, they would receive the full $1,125 as a refund. A common exam trap is to present a scenario where the 15% calculation results in an amount higher than the cap, for instance, $2,000. You must remember to limit the refundable portion to the $1,700 maximum per child for 2025. Another trap is confusing the total credit with the refundable portion. The total credit is $2,200, but only up to $1,700 is refundable.